Hi, I'm Jared Nelson from the Investing Channel, and welcome to Markets and Minds, the show where we break down big macro themes into simplified trade ideas. U.S. equity markets are on course to finish the month of August with decent gains. The Dow 30 is up 1.5%, the S&P 500 by almost 2.5%, and the Nasdaq 100 by 2.75%. Fears over the market's reaction to the Federal Reserve's plans to taper its QE program now look largely unfounded. August is often a very uneventful month for the markets, and though the last month hasn't seemed that exciting, a look at some of the statistics around their performance tells a different story and suggests that investors can be optimistic about the final 3 months of the year. Global equity markets are now valued at a record $118.6 trillion, according to Bloomberg data, with $2.8 trillion added to valuations in the last week of August alone. August saw the S&P 500 make its 50th and 51st new all-time highs during 2021, and there have been 10 new all-time highs for the broad-based U.S. equity index in August alone, the highest number seen in August since 1929, and well above the 7 new highs registered in August 2019, as is highlighted in recent research from wealth manager LPL Financial. The research also highlighted how well the S&P is performing compared to prior rallies, and it has now equaled 1995's tally of 51 new all-time highs by the end of August. It's also closing in on the all-time record of 52 new highs in the first 8 months of the year, which occurred in 1964. Until this month, this was one of only 2 years to have registered 50 new highs in the first 8 months of trading, the other having been 1995. The S&P 500 has also posted new highs in each of the last 8 months, and is therefore on course to match 2014's record of new all-time highs in each of the 12 calendar months. In both 1964 and 1995, the index went on to post additional gains in the final quarter of the year, adding 3.6% in 1964 and an impressive 9.6% in 1995. LPL Financial also analyzed the performance of the S&P 500 in all years which saw more than 30 new all-time highs through the end of August. In all but one of these years, the index went on to post above-average returns in the last quarter. The one exception was 1987, when in the face of a global stock market crash, the S&P 500 lost just over 25% in the final quarter of the year. The fact that both 1929 and 1987, years that both saw significant crashes, crop up in the performance data serves to remind investors that markets are rarely one-way bets, and we should always factor that reality into our thinking and investment strategy. However, the omens for continued gains in equity markets are positive. Q2 earnings were very upbeat, with 87% of the S&P 500 companies that had reported by mid-August posting earnings and revenue beats, a figure that is well above the 1-year average of 74% and the 5-year average of 65%. In fact, the 87% figure is a new record, eclipsing the 79% revenue beat rate of Q3 2020. What's more, S&P 500 stocks achieved a blended earnings growth rate of 89.3%, according to numbers from FactSet. This is the highest quarter-over-quarter growth rate seen since the 109.1% posted in Q4 2009. Not only is the percentage of companies producing positive revenue in Q2 a record, the percentage by which they beat Wall Street revenue forecasts has also set new records, coming in at 4.9%, compared to the trailing 1-year average of 2.8% and the 5-year average of just 1.2%. The biggest revenue beats were found in the energy, communication services, consumer staples, and information technology sectors, as this chart of sector revenues growth in Q2 2021 shows us. On balance, then, the rally in U.S. equities shows no sign of subsiding or slowing down at present. And unless COVID severely disrupts supply chains and economies over the next 3 months, then the data suggests that we should see further gains in S&P 500 during the final quarter of 2021. That's all we have time for this week. Make sure you do your own due diligence before making any investment decisions.